Good morning, everybody. It's the 4th of July. Happy Independence Day to our US friends. We are Signal Centre Talking Ball. Good morning, Jamie and Steve. How are you doing?
Good morning, Joe. Welcome back, mate.
Good morning.
Look at you. Right? You look all refreshed.
Yeah.
How was it? Was it good?
Yeah, it's absolutely brilliant. Thank you.
Yeah, good.
Lovely stuff. Okay, let's get stuck in for the start of a new trading week with the latest headlines. Just bring those up. So, Eurozone inflation hits a fresh record high. The headline, Eurozone CPI inflation increased to 8.6 for June from the previous number of 8.1, and this was slightly above the consensus forecast of 8.5. So pretty punchy stuff. In terms of what's going on in the US, the manufacturing number slowed out there. The ISM manufacturing index declined to 53 for June from 56.1 previously, and that was below the consensus forecast of 54.5. If that dips into that below 50 level, then we are in a contraction phase, and that would really just confirm, what we already know, I think, about the economy and where things are headed, maybe in the short to medium term. In terms of the US yields, they dipped lower. There was an initial surge in bond yields after the US ISM data, with the 10-year yield dipping to 2.8. The sellers came back out in force, moving it back up to around about 2.9 before settling at that number. We've also seen a partial dip in the 2-year yields as well. In terms of the US dollar, it's been pretty choppy, but overall still remains at elevated levels. Again, on the back of the ISM number that came out on Friday. We've got a US holiday today, as we said at the outset. It's Independence Day, so that will potentially keep markets a little bit subdued today. And finally, the Royal Bank of Australia are expected to hike rates again. They've got a meeting overnight UK time, and the consensus forecast is that there'll be a further 50 basis point hike to 1.35%. The rate decision will also offer forward guidance from the bank, and will be important, obviously, to the Australian dollar. So that's it in terms of headlines. Not a load to go on to start the week. So let's get stuck into some charts, and Steve can talk us through what he's seeing on Bitcoin. You're going to start off with? Yes.
Yeah.
Lovely.
Let's have a look at Bitcoin. While you're away, Joe, over the last week, it's been pretty negative. As you can see from this weekly chart, we're still hanging around this support level. We've been down to, well, a couple of weeks ago now, 17,700. Last week it was the lowest weekly close since December, the week of December the 7th, 2020. So yeah, not looking very good at all. All the rallies, we get a few minor spikes that you can see on this daily chart. All seem to be capped below the 22,000 level. Further resistance up at 23,200. We've got the 21-day moving average now just above us, 20,450. And you can just see the sort of like this this sell-off continues to grind lower. We have maybe some sort of trend line support coming in here. It's got 1, 2, 3 points. We've got this double top formation, which has been with us since we had the spike lower and the rally higher to 21,708. That's got a targeted move down to 18,000. And as you can see, if this trend line breaks, there's a good chance of it breaking as early as today. If this breaks, then that opens up the downside. Levels below this 17,700 really need to go back to the weekly chart, and we can see we've got support probably from this spike higher here, 13,750. And if we go back even further, this is the one that concerns me. This like really probably the line in the sand for me. If we do manage to get below 3,000, it's the end of Bitcoin. But there should be a little bit of support down there. I don't know if that makes anyone feel better who's holding Bitcoin at the moment, but I can see me going away for 2.5 weeks and coming back and people not talking about Bitcoin anymore. Let's see. Commodities, have a little dive into there. Gold has had a little bit of a pullback higher. On the weekly chart, we've had 3 negative weeks. You can see here from this weekly chart, we have got the potential for a double top formation. That would require a break of the 1680 support level. That's a 38.2 fib support or retracement. 50% is down at 1560, and the 61.8 comes in at 1440. So all negative really on the gold front as well. This is mainly based around the really strong US dollar we're seeing, although I think even looking at a formation looks like a short-term top may be there, but interest rates obviously in the US front and center, so I don't know if that's just going to be like a minor correction on the US dollar before it carries on higher. Resistance coming in at 1880 in gold, and as I say, if we manage to break this at 1786 level, it opens up quite a decent move. Maybe we could see a $100 move lower at some point. Oil seems to be trying to cling on to the gains. We can see we're in the potential ABC correction. Here's the A leg, B leg, C leg potentially moving down or targeting a move to 87.67 if it's consistent with the first leg. Over the last week, it's been, or last couple of weeks, it's been pretty volatile. Spikes lower and spikes higher last week, but the sellers came in again. So crude oil still remains a little bit pressured in the short term, but overall, it still is trending higher. So could get a decent sort of like test of that trend line support. As you can see, we're trading around the Ichimoku cloud. We've got the 21-day moving average above at 111.58, and below we got this trend line support coming in at 102.40. If we manage to get a break below this 101 level that we saw on the 22nd of June, then I expect that to open up a little bit of a flush out to the downside. Natural gas, actually, just have a little look at that, and just wanted to sort of like look at the move from last Thursday. Really, we didn't pick it up last week, but a really decent sell-off in that we hit the 61.8% fib retracement level and bounced quite nicely from that Thursday and the Friday's price action was pretty much a doji, sort of like contained within the previous day's range and open to close at the same level. So a little bit no follow through really from Friday, but yeah, again, we've opened up a little bit higher this morning on natural gas, but sold off on that. Think I can hand the baton over to someone.
Sure, thanks, Steve. Let's take a look at FX then. So, as Steve mentioned, dollar has been pretty strong still. I mean, we've seen a little bit of consolidation in recent weeks, but overall, it still remains at these elevated levels. We've got big resistance at 105.78, and while we remain below that, I guess there is the potential for this to eventually emerge as a top pattern, but it needs to do a fair bit more before we can get too excited about that. And overall, I think it would just be a minor correction lower, and there's no signs of it slowing down. Really, really strong. And in this kind of backdrop of weaker economies and concerns about economies, then the dollar, I think, is going to continue to remain an appealing asset because of its defensive qualities. So it looks like, for me, dollar is pretty much still the number one investment out there at the moment. If we take a look at some of the other currencies linked to the US dollar, we take a look at euro first of all. That continues to bumble around these lows. We've got two lows in place here, potentially a third if we include that one there from the 30th of June. But this is obviously a very large level of support, around 103.50. If that breaks, then obviously we're looking for considerably lower prices, potentially in line with the dominant trend that is overshadowing everything really at the moment on this particular pair. Just scrolling back to the left to see when what levels we can potentially be looking at below that. Just flick it to a weekly chart to give us a bit more on the chart to look at. We'd be going down to levels last seen in 2002. Wow. So pretty scary stuff. No real signs of that slowing, it seems, at the minute. But obviously, we've got a huge level of support here. And at the moment, the bulls appear to be defending it. But for how much longer, we'll have to wait and see. If we take a look at cable, that continues to trade around this 78.6% fib level. It hit this level back on the 14th of June, which then prompted a pretty decent move to the upside as a corrective move, but it's just given that back up again, and we're back down at those levels. Hit it again on the 1st of July on Friday before posting a decent bounce, but this 78.6 here at 120.25 seems to be doing a good job. So this level was relevant from the lows that we posted in and around the height of the pandemic back in March 2020. And that really is the next level to look at on the downside. So a lot of fresh space for that to move into, down to 114.10 we're potentially looking at on cable. I'm going to look at finally Aussie versus US dollar, just because we've got these rate decisions overnight. That continues to trade around lows. We made new lows, actually took out this low from May, 11th to 12th of May. On Friday, we're having a bit of a bounce back. We saw a decent reaction from that level. Any corrective move to the upside is likely to be limited. We've got 38.2 up here at 71.06, so maybe be looking at that kind of level. But lowest prices we've seen on Aussie versus the US dollar since June 2020. And if we're looking at levels below that, we've got obviously these pandemic lows down in March 2020. And if we just stick a fib on that, give us an indication of maybe some other levels to target. So we're bang on the 50%. That's why we saw a reaction at that level on Friday, on that 50% level. Below that, we've got 61.8 down at 64.61. So potentially a lot more downside, particularly if the dollar maintains its strength that we've been seeing over a number of months now. So that's that for FX. And let's move it on to indices. We'll start off again with the Australian market, just because, again, we've got these rate decisions later or overnight, sorry, in the UK. We saw a slice through this support level at 67.57. And then we saw prices eventually bottom out at 64.12-ish, which is a 38.2% fib level. And the bounce that we've seen over the last few sessions or so has rallied back into the underside of this, what was support, now resistance. And we saw a really strong reaction there from the bears to step in and start selling it pretty much spot on at that level. And we've seen prices continue to move lower. So it wouldn't be surprised if we see the 38.2, all these lows down here. So the actual low was 64.05, get a potential retest, but this could be quite volatile, obviously, with the rate decision that's due out overnight. If we take a look at DAX, we can see that has, well, it did hold some support around this kind of zone here that we marked on the chart at 13,277, but then we slipped below it. And we've seen a couple of retests into that level, which have all failed, and prices have continued to move lower. The 78.6% fib did a minor job, but we've slipped through that quite convincingly now, and looks as though we're going to go and challenge these lows that we posted in March earlier this year. And that comes in at 12,431. So not looking great for the German index, which is obviously the largest economy in Europe. So not looking great on that. If we take a look at NASDAQ, we saw a gap fill last week. We actually overshot that gap before the sellers then stepped in, pretty much in line with this downtrend resistance, and prices have continued to slip lower. We're still above the lows that we posted in mid-June on the 16th. But again, I wouldn't be surprised if we see a retest of that and then maybe start heading down towards this 61.8% level at 10,500. But clearly, the pressure remains on the downside there. S&P 500 still got this big head and shoulders top pattern that's sort of a dark cloud over the overall market. We saw a bit of a retest into this neckline, which cuts to a lot of price action. So I'm not entirely convinced by that, but it seems to have stalled the buying anyway, and we've seen prices slip lower. We did post lows on the 20th of June at 388. Is that right? Sorry, let's get it right. 3636. We've got a 50% fib level here at 3,500, and we've got a measured move of the head and shoulders target at all the threes, 3,333. So still looking for lower prices on the S&P 500. It does feel that we are going to continue to see weakness there. FTSE 100 is really sideways at the minute. I mean, it's obviously been propped up a bit by commodity prices and banks, obviously with interest rates moving higher. That's supporting a lot of these bank stocks, and there are some big names in the FTSE 100 that are helping that out. We saw a really strong reaction here from the 24th of June. Prices held above the 50% for a few sessions, but we're in and around that level again now. So got some support between sort of 71.56 to 7100. Not really many trading opportunities from what I can see on that at the minute. It looks like it's going to be still quite choppy and quite sideways. So do be careful if that is your market of choice. That's it from me on the stocks, indices at least. Anyway, I'll hand it over to Jamie and you can talk us through some stocks.
Yeah, thanks very much, Joe. Right, we'll start off as usual today with our biggest gainer and loser. Our biggest loser of the day, I actually left this. This is the same losers we had on Friday. And on Thursday trading session, it was down about 40%, and then on Fridays, it was down another 49%. So a really tough time. Overall, in 2 days, closed 67.5% lower. So a pretty rough day. And did we have any information on why this happened? Oh, it was about the data that came out about kidney transplant. So I think that mustn't have been good. Just having a quick look at this chart, we did have some quite nice technical levels. We had a really nice support level which broke through there, and then it was a little bit less clean, but a similar kind of thing here, where price broke through, and obviously it's continued much lower from there. Our biggest gainer of the day, which I think is one we looked at previously because it had some chart annotations, is this BLTE. I think we looked at it when it broke out of this nice, it's kind of a cup and handle off what I assume is the IPO back in April. But it was up 21% yesterday. This is Belite Bio. Yeah, up 21%. Had a really strong move. It's up over 100% from this breakout level here. I don't think we have any information on why this is, but a really, really strong move if anyone managed to get in on that. The only real trade I'd probably see here was the break of this level and perhaps on this pullback here. Other than that, it's pretty much just shot away. So yeah, that one's looking pretty healthy. We'll take a quick look at the stock heat map. I thought what we'd do today is look at all the weekly charts, because obviously the US markets, they're fully closed today, aren't they? They're completely shut. So we won't get any movement on any of these stocks. If we look at the weekly charts today and we'll have a look at the daily charts tomorrow for how they performed on Friday. But on a weekly basis, you can see it was a bit of a mixed bag, with actually the bigger names seeming to struggle more than some of the smaller names. You can see Tesla's down 4%, Amazon down 2.5%, Google down almost 4% on the week. The real sector that stood out to me though was electronic technology. You can see down here, if we click on it, we can get a better idea. Nvidia was down 12%, AMD was almost down 12% as well. So these are much bigger moves on the week, and we will jump in and have a look at some of those shortly. Yeah, other than that, it was a bit of a mixed bag, but I think, yeah, let's just get stuck in. We'll start off with Nvidia, bring up a weekly chart. You can see that's a pretty significant close for me on a weekly basis. We were playing around this, what was it, a 155 support level. We'll quickly drill down to the daily so we can see that a bit clearer. We touched it here back in May, kind of got close to it again at the end of May. Looked like we might break through here in June, the midway through June, but it looked like the market kind of got away from itself on the downside. It had to have a bit of a pause, a bit of a breath, before the bears managed to break through it. And yeah, you can see that's a pretty nasty close on a weekly basis. If we look at the volume, nothing too crazy on the volume, but this weekly outside bar does, to me, indicate there'll be some more selling incoming for Nvidia. The likely targets for me, we've got a bit of support down here, and I think if we take you can kind of take Fibonacci from a number of these spots. We'll take it from this low, see what we've got. So let's chuck on a few of these. You can see we've just broken through the 61.8 fib from the December 2018 lows, and it's a fairer way down to the 786 fib at $98. So that would be a pretty considerable move if we got there. That would be another 34% or so, wouldn't it? So yeah, that one's looking pretty tough. AMD's not looking any better for me. I think we drew on this green support line last week. If we quickly remove the Fibonacci level, you can see, so we're at this key support now. I'd expect buyers to try and prop it up at least a bit here. But for me, what's not looking great, if we really see this volume in the market at the moment, which to me is, I mean, you could take it either way. It's either a sign that people are trying to dump their positions or buy into it. But for me, with this extended move we've had from 2016 where it was trading, I mean, this has been quite a run for AMD, down, what were we, 150 at this point? I mean, $1.50, trading all the way up to $165. So if anyone managed to ride that train to the top, they'd be looking pretty healthy now either way. And then taking some Fibonacci levels, the 61.8 fib is perhaps the next level if we were to break through our current support. So that would be at 63.82. We'll quickly flick through a few more. Nike, pretty bearish close as well, closing through the 61.8 fib. It's got a fair bit of room to fall here. Perhaps there'll be some support at about $92. We are still above $100, so perhaps there'll be a bit of buying interest there. Shopify had this really big, it looked like we were getting a bit of a rally on Shopify. We had this nice weekly candle the previous week, but last week's candle was completely covered up all those gains, closing on another outside bar, so that one looks pretty sick as well. GME, pretty tight price action for the last kind of, well, since the back end of May. Coiling, perhaps, I think we've said this before, a break of 114 or a break of 150, where are we, 152 is what I'm looking at there. Let's flick through a couple more. Where's Apple at? Nothing too crazy on Apple, still holding above that 38.2% fib for now. Airbnb, we're almost there on our target from this channel formation, not quite though. Still looks pretty unhealthy to me. The rest of the stocks I look at are kind of a little bit in the middle of nowhere. So we could probably move on. Let's have a quick look at Meta. You can see that's trying to hold on to the 61.8 fib, and this is a pretty key level that's actually been tested before it became a Fibonacci retracement back over in 2018. COVID lows did break through it, but we did spring back above it pretty quickly. So this is a pretty key level for Meta platforms. We'll have a quick look at Novavax before we go. This held up pretty well last week, actually. It was up 11% on Friday. But we're running right into resistance if we just come into this daily chart. It's been pretty bad for a long time. We've kind of kept a close eye on this stock, but this level we're around now is where sellers have come in before. So we'll see if the sellers will jump back in at this point. It'll be tomorrow now because we're not going to have anything today, but we'll leave it there today. Yeah, I'm trying to think of a way to summarize it. It's Nvidia and AMD that are looking pretty sick, and we'll see if that can maybe, I don't know how much weighting they've got percentage-wise in the S&P and the Nasdaq, but maybe they can drag it around a bit if they keep struggling. So we'll have to see how that develops this week.
Okay, cool. Thanks, Jamie. So let's take a quick look then at our gun to the head challenge. So just to remind everybody that's watching, we all pick a trade idea live on the video each trading session. Each of the ideas must have a stop and a target. They're all placed at market. And we cut these ideas off at 9 p.m. UK time, or when the stop or the target is hit. Just a bit of fun between us, just trying to test our technical skills and spotting opportunities on an intraday basis. So we're going to crack on with that now. All these ideas are published actually on our TradingView channel. So if anybody ever wants to check them out, they're all time stamped. They're all there for everybody to see. You might not want to look at Friday's ones because they didn't work out too well, but that is the name of the game. Unfortunately, it's risky stuff, as is all trading. But we always have appropriate risk management on all of these trade ideas. So this was Jamie's idea on Friday. He was selling the US dollar versus the Swiss franc. All the reasons for it there, as well as obviously a risk warning. Pretty good level there by the looks of things, but as we know, these trade levels don't always play out as you expect. So we see a little bit of a mover higher there, which meant Jamie was stopped on that particular idea. And Steve went short of oil, looking for a continuation lower in line with the trend that is starting to emerge on oil in the short term. And sadly,
Don't play it.
That didn't work out either.
Oh, no.
But, we're an honest bunch. So, we don't claim to be having outrageous success, or hit rates on these trade ideas, but we always look for big risk reward opportunities. So when they do win and they do play out, it can be pretty tasty indeed. I did actually notice, Jamie, you had a really nice win on, I think, dollar CAD while I was away. Maybe I'm wrong in saying that.
No, you're right.
Yeah, that did hit target there.
Yeah, we got there.
So
I think it was pretty flat on the week overall. We had a couple losses, but like you say, we wait for these bigger wins to try and pay the losses back and more. But I think we're doing all right overall, aren't we? Overall.
Yeah. So we've been doing this for a long time now. We've got at least 1,200 trades here that we've done. So that's a lot of information there that people could check out if they wanted to. But things have been trending quite nicely higher really for a number of months now. Seems to be flattening off a little bit, but it only takes one or two winners to get us back on track. So that's what we're going to try and deliver today. I've got one ready. I've got DAX on my chart here. So this is an hourly chart on DAX. Talked about it on the daily, looking pretty rough really at the minute. It's trending lower, as we can see here on the hourly, and if we look at the other time frames, you'll be able to see a similar situation. So what I've seen here on the hourly chart is a little bit of a bounce in price up to a 38.2% fib level of this short-term period here, and we're posting a red-looking candle over the last 27 minutes. But prior to that, we posted this shooting star candle. We had a decent move to the upside, but the sellers stepped back in. So I think we're going to see more downside on this. So I'm selling at 12,866. I've got a stop loss above the high of that candle that was posted between 7 and 8 a.m. today UK. That comes in at 12,970. And I'm targeting a move back to these swing lows at 12,616, giving me 2.43 R on that one. And that's going to be published right now to the TradingView account. So if anybody wants to check it out, please feel free to do so.
Lovely.
Nice, good stuff. You go, Steve.
I don't mind going next, unless you've got one ready.
No,
Jamie. Okay.
No, you go.
Just quickly cover off silver, which I didn't cover in the commodities. Someone just asking about it. Really, silver's broken down, broken out of this range that it's been trading in for, well, since August 2020, and quite a significant break lower. Looks like further downside is expected. We've got support coming in at 1888. That's the weekly chart. Daily chart showed a little bit of potential recovery. This is almost close to a bullish hammer, where prices on Friday got down to a low of 1939, bounced back up. We're trading about 45 points higher than that, so a little bit of a reprieve. You can see on the 4-hour chart that this is a potential bottom, but yeah, at the moment the $20 level of resistance looks to cap the rally at the moment. If anything, I'd be looking to sell into rallies, but maybe and start with a $20 level. You can see on the hourly chart we're in this short-term downtrend. So that was silver covering off that. I was thinking about doing a trade idea on it, but for me it feels like it's right in the middle at the moment, so I'll avoid that. What I am going to look at though is this break in Ethereum. Obviously, the weekly chart has pretty much followed Bitcoin, although on the weekly chart, Ethereum has broken below the significant support that we built around about the 1730 level. For me, that's a bit of a line in the sand. If prices can get back above there, then it's hooray for Ethereum, and probably all the other cryptocurrencies will be doing well, but it doesn't look like it's going to happen to me. Another level of support at 1420 has been sliced through, and yeah, over the last couple of weeks, it's just been hanging around these supportive lows. You can see that sort of like the momentum to the downside has slowed down a little bit. 21-day moving average coming in. On the 4-hour chart, we're below the Ichimoku cloud, so even the short-term chart is, although it looks a bit sideways, it's in bearish territory at the moment. You can see this like 3 candle formation on the 4-hour chart, bit of an evening star formation, evening doji star formation. So yeah, I think we're going to see further downside today, unless something magical happens in that world. So probably the ideal stop level would be above 1,100, but this is just an intraday trade idea, so we're going to be a bit more realistic. I've put the stop just above the Ichimoku cloud resistance, and also the last few hours of price action 1055 we haven't got above. So the risk reward on this is 4.33. We're going to target a move back down to the swing low that we saw on the 30th of June. The stop is at 1060. So selling Ethereum at 1048, targeting a move to 998, and the stop at 1060. I'll publish that now.
Dave?
Steve, good luck. Right, I will finish it off, and I'm taking a look at the Canadian dollar against Swiss franc. I'm looking again at the Swiss franc. It didn't go well for me on Friday, but hoping for different fortunes today. If we take a look at the daily chart, we obviously had this really big step back in the middle of June. Since then, we've consolidated, but for me, I've still got a slight bias to downside, especially on a kind of a slightly shorter term chart. Looking at the 4-hour, we've had the sell-off, had this consolidation. You could argue this is a bit of an inverse head and shoulders, and I tend to agree. If we get that break above the neckline, which might be a bit clearer on an hourly chart, then it would nullify the idea I've got anyway. So, you know, if that happens, it happens. But for me, I get better risk reward trying to sell this, going with the trend and keeping stops just above kind of these recent highs here, giving a bit of room because, well, to be honest, I've been whipped out a couple recently, so I thought I'm going to put my stop a bit above the high and then give it a little bit more room than that. Just playing a bit more defensive at the moment. So, like I said, I've got this resistance here. It's touched it a few times, and I'm just going to hope it holds up again today. So looking to sell the Canadian dollar against the Swiss franc today. Current price we are trading is at 0.7412, 7452. I can see if I try really
Nearly
hard.
lost 40 ticks there, Jamie, before you'd even started.
Yeah, my eyesight's getting worse by the day. I will see an optician for that. We're going to take profit at 0.7357, and our stop loss is at 0.7480. So that gives us a potential to get 3.39 are out of this one today. If we do get the move lower, we are hoping for. And like Joe and Steve both said, we will be posting these ideas shortly. They probably already have, but I'll be posting this in the next 5 or 10 minutes. So yeah, going with that today.
Lovely. Well done, gents. Let's hope for a decent outcome on those. So it is going to be a quieter session today, just because we've got the US guys on holiday for Independence Day. So that can mean lower volumes across the board. In terms of economic data, we have at 3:30 UK time the Bank of Canada Outlook survey. So if you've got any exposure to Canadian dollar, as Jamie's going to have with his gun to the head trade, then do keep an eye out for that. And then overnight, or 5:30 in the morning tomorrow UK time, we've got the Reserve Bank of Australia policy decision. And just to reiterate there, the expectation is for a 50 basis point rate hike to take that to 1.35%. So if you've got any exposure to anything Aussie, then do be careful and be aware that you might have to get up quite early to watch that one if you're based in Europe. Anything else, gents?
No, that's it. Thanks, Joe.
Lovely.
No,
well,
good.
good to be back.
Well, I'm off now. That's me done.
Is this your last day today?
Yeah. Well, yeah. I've got like an early trip to the airport tomorrow to avoid the traffic.
Lovely.
Nice, exciting.
Well, you're going 2 weeks early to the airport.
Yeah.
And you going away for a night, aren't you?
Yeah, just a night. No,
Have a lovely time, Steve.
Weeks, yeah. So,
Yeah,
see you later in the month. But hopefully there'll be some sort of market to come back to.
Yeah, let's hope so.
Fingers crossed.
Yeah, lovely. All right, Steve, have a fantastic, well-earned trip. And Jamie and I'll be back tomorrow morning.
Lovely. Cheers.
Cheers, then. Bye-bye.